JBlog, December 27th, 2009. The market definitely put in a very impressive showing for the last week. Well, second to last week of 2009. The Santa Claus rally, as they call it, was definitely impressive. Bulls pulled out all the stops on that one, and yes, I must say, they really do want those bonuses up there on Wall Street, and I'm sure this is the best bounce that money can buy. Um, in the meantime, I pretty well had to ignore that, and I came across some interesting information actually last week, and this is on the weekly charts for the indexes, world indexes. Got about 30 countries that I look at on a regular basis, ETFs for countries. And there's a common theme that has developed in a lot of them. Here, the first one we're looking at is China ETF, and this is the Morgan Stanley A-Share Fund, CAF. It has definitely been, this is a 3-year chart, and so there's weekly bars. It has definitely not reached new highs, but it has been showing declining tops here in what supposedly is the country that's going to save the world. So I'm looking at this, and then the next one over is the emerging markets ETF, and this is exactly the pattern that I'm talking about right now. There's this curl. It's not so pronounced here. It is more pronounced in some of the other charts. And the great part by looking at ETFs is by looking at anything but the US market, it is not as dependent on the US dollar. It is not as dependent on US liquidity. It's bigger. So let me show you basically what I've been seeing about this curl. Here we have the Pacific minus Japan, and there is once again this curl here. So this is a weekly chart. There is some rolling over happening. Australia charts a curl going down. Canadian, less of a curl, but still there's definitely a slowing down. Sweden curling. Germany stronger, like Canada, but definitely flattening out on Germany as well. Hong Kong flattening out. Italy definitely curling. Italy is in big trouble. Basically, they have spent way too much money. Japan was curling, has had a little bounce here because of some good news that has been created over the last week. We'll see how far that goes. What's this one? Belgium. There's an obvious curl here. Switzerland, flattening out, not quite curling, but flattening out. Malaysia, curling. Netherlands, flattening out. Austria, definitely curling, another country that is almost bankrupt. Spain, curling, another country that is in serious trouble. France, France is doing a little bit better like Germany, but still flattening out, a little bit of a down curl here. Singapore still going strong, stronger. Taiwan, similar to Singapore, not quite as steep as it was, but those two are definitely still running. United Kingdom curling again. The UK is in trouble. They again owe way too much money to the world. And for the last row of charts, we have Mexico here. Mexico is still going up strong, which is surprising, but whatever. South Korea going stronger as well. Brazil going stronger as well. South Africa definitely flattening out. The euro zone index curling over. The China, another China one. This one is actually curling. This is a China 25. Definitely curling on this one here. So the Europe 350 looks like it's curling. The Latin American countries are doing quite well. So that's a part of the world that one might want to look at. I do definitely like Brazil. That is one country that I believe has a bright future. India, another country that could potentially have a bright future at one point if they ever work through their corruption problems and their bureaucracies. And the global world index, again, curling over. MACDs are crossing over, tricks coming together, CMF going from positive into negative. Everything is basically pointing down for a lot of these countries, and it's not just one country, it's not just two countries. It's like half the countries in that list had a down curl. It was something that I noticed right away. But on our side of the ocean, the New York Stock Exchange Composite has once again reached the highs where it has capitulated the last 3-4 times. So it's still flat. It's been flat for the last 2.5 months, 3 months, been doing nothing. The S&P has broken out. The S&P has achieved a new high on Friday. Friday was definitely a very strong day. Mind you, that strength was localized in not so many stocks, so we'll see where that goes. The VIX definitely dropped to new lows, complete complacency in this market, which is something that scares me. There's a whole bunch of people out there that figure that nothing can possibly go wrong, and that's usually when things go wrong, when nobody figures it can go wrong anymore. So that's somewhat spooky. Um, Fact of the matter is, we've made it through this financial crisis very tight by spending a whole ton of money. By the way, Apple had a fantastic day on Friday, which makes me quite sad because I'm short. But anyways, we've made it through this financial crisis by basically dumping a whole ton of liquidity into it. GDP can be manipulated by government borrowing and spending because the government's borrowing is not part of the GDP calculation, but the government spending is. So, on that point of view, if the government borrows, let's say $12 trillion and then dumps that into the economy, then that shows up as $12 trillion in GDP, and nobody bothers about the fact that one day it has to be paid back. So, GDP is a lie, it's a fake, but you can certainly manipulate things using GDP for a while. But the problem is there is another financial crisis on its way. It will hit either this year or next year, probably sooner than later. This is a combination of commercial mortgages, option arms expiring, and more people losing, basically running out of unemployment insurance, and therefore prime mortgages going into subprime and being foreclosed upon. And the problem is that, yes, the last time we made it through this by throwing a whole bunch of money at it, now we're broke. Now what happens if we have another disaster happening? Are we going to go from 12 to 24 trillion? We're going to go to 36 trillion, 48 trillion. How far can we push this thing? How long can we maintain this market at these ridiculous levels? Because this is a market that indicates everything is fine, and not everything is fine. So that'll be interesting to see. I don't expect 2010 to be a perfectly wonderful wonderful year, and I don't expect a V-shaped recovery. Burlington Northern had a very interesting piece on that. They don't expect a V-shaped recovery neither. Actually, they are quite bearish on the future. One of the bigger shipping companies, but. Anyways, that was all for today. Have a happy new year, and let's talk to each other in the new year. So all the best, make lots of money, whether the market goes up, down, or sideways. Bye.